talk about synthetic indices. This is the first video in this playlist, and what we'll focus on will be synthetic indices, how exactly you can access them, how you can trade them, how you can make money from them, and what exactly is synthetic indices. So recently there's been lots of arguments in the Forex world. Should I do synthetic indices? Are they good? Are they okay? Should I trade with them? Or should I focus more on the major Forex pairs? You understand? I will call them major Forex pairs, even though at the end of the day, they are all Forex, right? There's nothing like fake Forex, okay? They are all Forex at the end of the day, foreign exchange, Forex market, financial instruments that can be traded, right? So a lot of argument has been happening. Which of them should I focus on? Now, before I answer that question, let me first of all tell you what synthetic indices is all about. Synthetic indices are simulated market indices. They represent price movements, and they are generated by mathematical models rather than real-world assets. This simply means that they are generated by algorithms, by mathematical equations and the likes, rather than real-world. So the real Forex market, I'm going to call it real, the real Forex market like Euro, USD, USD, JPY, gold, silver, these have real-world assets, right? They have a real economy behind them, which is why synthetic indices was given the term synthetic. Synthetic means something artificial. So from there, you can know that they are artificial, they are simulated, they are not the real world. Euro USD, there is Euro, which is the currency of Spain. So there is USD, which is the currency of United States of America. Odd card, Australian dollar, Canadian dollar, these are real world assets. They have an economy, they have a country behind them. They are currencies that we actually spend. For synthetic indices, examples like volatility 75 index, step index, jump index, baskets, they are not real world assets. There is no real economy behind them, right? So so they are designed to behave like actual markets with volatility, trends, and randomness. Okay, so before we dive deeper, if you have not followed the channel, please give us a follow and drop comments on any question you have on synthetic indices or what video you would like me to make next. Okay, moving on. So key characteristics: there is no connection to real world assets. That is the first thing we've been mentioning. They are not connected to stocks, commodities, Forex, nothing, right? They are available 24/7, which is nice. Unlike the traditional markets, your Euro USD, your Forex market, they are available 24/5. That's 24 hours, 5 days a week. But this is available 24 hours, 7 days a week, every single day. And they are created using random number generators, RNGs, and they are tested for fairness, right? So this brings some form of certainty to synthetic indices. Now, volatility is predefined. For example, volatility 75 index simulates 75% market volatility. So I will give you some of the types, right? And their behavior and the use case, right? Volatility 10, 25, 50, 75 index, they simulate different levels of market volatility. So volatility 10 is simulating 10% of market volatility, of real market volatility, right? So it is used for trend and swing trading. You understand? And these ones, they are usually good for beginners. So as a newbie, since you are new to synthetic indices, I will advise you begin from this, right? Then we have the crash and boom 500, crash 500, crash 1000, boom 500, boom 1000. We are going to get there. I'll show you how to assess all of them. So they have frequent upward or downward spikes. You understand? The crash usually going up, the boom usually coming down. They are good for scalping, just few minutes of trading and breakout strategies, right? So we have the range break, the range 100, the break 100, like that. Breaks from fixed price ranges. So one is good for range trading, the other one is good for breakout trading. Then the step is good for algorithmic trading, both trading, right? Because they usually have fixed price increments. So like the word step is like a step, right? So I just told you these things, they mimic the market movement. They are synthetic, okay? And some of the pros and cons. The advantage of synthetic indices is that it is available 24/7. There's no downtime. It's great for night traders as well. Great for those who trade weekends, right? Then there's consistent volatility, so it's good for your strategy testing. News doesn't come in to affect it. That's why there's consistency. So it's unaffected by real world events. There is pure technical analysis. Nothing like what Donald Trump tweeted. There is nothing like the Ukraine-Russian war. It doesn't affect it, right? So there's no slippage or gaps. There's controlled pricing. So some of the cons is unregulated. It is unregulated. So most synthetic indices are offered on non-regulated platforms. So the next video in this model, in this playlist, I will show you the proper broker that you can register with to use synthetic indices. You can also check the description of this video. I'm going to put a link to the broker, very important. So market maker model, that is one of the cons. Sometimes the broker is often the counterparty, right? Transparency concerns. People wonder about the broker's integrity since there is no real market outside there. It's not backed by real assets. So there's no ownership of anything tangible, right? So these are the cons, these are the pros of synthetic indices. Okay, so before I answer the question of which of them should you try synthetic indices, is it better than normal Forex trading? Which of them should you focus on? Before I answer that question, let me tell you the major differences between the two parties. Okay. So for the Forex market, when I say Forex market now, I mean the normal Forex market, right? The underlying asset is real currencies. Euro, USD, GBP, JPY, they are real currencies. Then synthetic indices, it is simulated market, no real currency. So the market type, Forex market is decentralized. It is global. It is the real world economy. Synthetic indices is not decentralized. It's artificial. The broker created it. Example of a good broker is the rave. So the volatility, this varies by session on news. But for synthetic indices, it is fixed or programmed, which is kind of good. The availability, this one closes on the weekend, where synthetic indices never closes, right? It never closes. The market influencers, we have news, central banks, geopolitics. This one is none. Price moves based on algorithmic models. Liquidity is high, especially in major pairs. This one is controlled by the broker. Not so good, Liquidity is the availability of cash, of money in the market, right? So this one is not controlled by anybody. Lots of traders come in institutions. This one is usually controlled by the broker. The spreads are variable. This one is often fixed or consistent, right? So the slippage can occur during high impact news. However, if you have a good broker like the ones I usually recommend, you will not notice it. In synthetic indices, barely notice slippage. The manipulation risk, the Forex market, it is subject to real world volatility and spikes. You understand? This one is broker defined pricing. This is why we have potential trust issues, right? Then there is technical analysis. This one requires context. Is news plus price action. It's not just price action, but this one is purely technical. Price action, SMC, ICT, whatever. Fundamental analysis, it is important in Forex market. In synthetic, it is not important, right? So this is best for real-world trading, long-term growth. This is best for strategy testing, scalping, both short-term gains. So the execution speed, this is fast, but it can be affected by liquidity and brokers and the like. This one is usually instant because, well, it is a simulated environment, right? So the broker dependency, this one has many global brokers available. This one is mostly limited, right? Mostly limited. So that is their differences. So before we go on to rate them, if you have not given us a follow, kindly do that. Give the video a thumbs up so that the YouTube algorithm is going to show it to more people, especially since you've watched this level, shows you're enjoying it. You can drop a comment on what exactly you want me to talk about next, and I'm going to do that. So let's rate them. This one has real currency, overstimulated currency. I will go with the real currency. This one gets a negative here. This one is decentralized, it's global here. This one is broker created. This one varies by news, session, depend on how you see it. But I think most persons want something fixed, something they can predict that will help your trading, won't it? So this gets bad here for closing on weekend. This one never closes. market influencers. I think I'll give it a good share and give this a bad year because you don't want it to be influenced by a particular broker or something. Liquidity is high. Yeah, it's a good thing. Lots of traders as well. Manipulation becomes a little bit more difficult. So the spreads variable. Want something fixed. I'm sure you've seen situations where you place a trade and the spread gets wide overnight because the session is closed. For example, in certain pairs, even all pairs will actually do it if their sessions are closed. Then the spread gets wide and it will hit your stop loss because the bid and the ask price are so far away. One of them will hit your stop loss and the market will keep going when the session opens. Yeah, that's because of spread. We don't like that. Slippage is a bad thing. So this gets a good year. Okay, so I think at the manipulation risk, yeah, this gets a bad year because of the manipulated by the broker. So this requires news and price action. Honestly, it depends on how you see it. Some persons like to trade news, some persons don't. Fundamentals, some persons want the fundamentals, some persons don't. So real world trading, long-term growth here. Short-term, not really. Execution speed, this one best it here because it's instant. So broker dependency, I'm going to give this a good and a bad here because it's just few brokers. So let's count it. This one is 1, 2, 3, 4, 5, 6, 7. This one is 1, 2, 3, 4, 5. Okay. So the synthetic indices get 5 on my rating. This one gets 7 on my own rating, right? So which of them should you, back to the question, yes, should you also try synthetic? The answer is yes, right? The answer is yes. You should try synthetic, use a good broker. Like I said, check the description. You will see, have my link to register with a proper broker. The answer is yes. By all means, please try out synthetic, try it out. You don't, especially during the weekend, if you have some time, you can just try it out. The next video in this category includes how you can register with the broker and start to place trades, start to practice on a demo account. How you can even deposit, withdraw, everything is right there in the next video, right? Just pretty straightforward. Very important. So yes, I would advise you try it out. The real market, the normal Forex is still better, but there's no harm in having more options, especially during the weekend, right? So it was 7.5, I believe 7.5, and that is not so far apart, right? That is not so far apart. So moving on, these are some of the most traded synthetic indices. These are some of the most traded synthetic indices. We have volatility 75 index, boom 1000, boom 500, crash 1000, crash 500, volatility 100 index, volatility. In fact, all the volatility are they are some of the most traded. Then the boom and the crash. The step index and the drop index are also gaining numbers, right? But based on statistics, these are the most traded index. So I'm going to show you how exactly you can assess some of these, how you can assess these synthetic indices and analyze them. Yeah, your normal strategies will work, but I'll still create, there'll be another video in this playlist that will show you the right way to analyze synthetic indices and some of the recommended analysis based on the pair. You understand? Of course, you should always do your demo trading to be sure to confirm it, to validate your strategy. But let me show you how to assess it. It's just pretty simple. It's straightforward. So here you have it. I mean, you can use MT5. Like I said, in the next video, I'll show you how to register with the broker and log into MT5. You can analyze on MT5, or you can use TradingView. Just type tradingview.com, no, tradingview.derive.com. So makes a lot of sense. Yeah. So it's going to bring you straight to this chart, right? It's pretty simple. And all you need to do is click here. Make sure you choose derived, because you can choose other Forex this thing, but it will not show. Choose derived, remove the symbol, so you can see everything. And there you have it. So many. Jump 25 index, right? You can even go on to compare. So if you do not know how to use, If you don't know how to use TradingView, check my channel. You'll see a video on how to use TradingView. You'll be able to analyze with it. But let's go on. The next video, we'll create accounts and you'll be able to place trades on synthetic indices.